Hello options traders, welcome everyone and happy Friday. I wanted to post another technical analysis video here to help everyone. And it's called Volume by Price. And it's one of my favorites to use. And it's in a unique category because it sits off to the side on your price chart. So if you think back to some of the other videos that we looked at, such as Bollinger Bands or Stark Bands, they actually overlaid on top of your price chart or your candles. And those are called upper studies or overlays. And then we've looked at some that sit down below, off your chart, the lower studies, things like MACD, RSI, stochastics. But this one's in a unique category. It will sit on your price chart, but it's going to sit on its side. And it's called Volume by Price. And the thing that I like most about it is it will help you to identify potentially hidden levels of support and resistance. So let's take a look at Volume by Price. So first of all, as a recap, why is volume so important? Well, volume precedes price. We generally don't get big volume because a price moved. We get a big price move because everybody rushed in to either buy or sell. So it's volume that determines prices. Now, can it be possible that because prices are low that we get some activity in there? Of course, that's always possible. But the general consensus is that it is the volume that is driving prices. So if we can find areas on the chart where we get large areas of volume, certain prices, it can help us to identify support and resistance levels. So the technical indicator here, what it's going to do, it's going to show the total volume for various ranges of stock prices. We're going to take a certain range of stock prices, divide them up into subcategories, and then find out the total volumes within there. Now, it's also interesting to note that the chart only considers or only views the data in the period of interest, or the period that you're looking at. So if you're looking at a one-year chart, we're only considering the closing prices in that period. Unlike some other indicators, let's say moving averages, where the first data point or the first few data points on your chart are actually being calculated off the chart. They're being found by prices that are not even in the chart. And this is unique in that sense. You're only going to be looking at the calculations for the data in that period. And because of that, you don't want to use these to try to backtest other data. You're only considering the prices that you're looking at. The calculation is fairly simple, although it's really tedious, so that's why we have computers to do these for us. But I want to go through it manually so that you understand what you're looking at. But the basic idea is that we're going to take a range of stock prices, let's say the last 6 months or the last year, and we're going to sort the data from low to high based on the closing prices. And then we're going to take the high minus the low, the highest closing price minus the lowest closing price, sometimes what we call the range. And then we're going to take that range and divide it by 12. Why 12? Not really sure. That's just the way that the people who designed this indicator said it should be done. We're going to find out it forms a histogram. There are better ways to do it than by dividing by 12, but that's the way it's done, so that's the number that they chose. And then what we're going to do is we're going to find the total volume for all the prices in those ranges. We can also get a little fancier, and some computer platforms will do this for you, and they can separate those volumes into negative and positive. Now, the E-Trade platform, unfortunately, does not do that. I think it's a pretty handy little feature, but I'm going to explain it just in case you happen to see it on your platforms so you understand what you're looking at. So the best way to explain this is to bring up an Excel spreadsheet and actually step through an example. So let's take a look at Home Depot. So here's our Excel spreadsheet with Home Depot, and I've taken the last 6 months of closing prices. You can get this from finance.yahoo.com. Just click on historical data and download them. And it normally comes up according to date. But what I've done is I have sorted these according to closing prices. So at the top, we have the very lowest closing price, 172.23. And down at the bottom here, after 6 months of trading, 213.85 was the highest. So if we come back up to the top, we're going to take that high trade over here, 213.85. We're going to subtract off the low trade of 172.23, and we get a difference of 41.62. That's the range that I talked about. That's the highest closing price minus the lowest closing price for this period. And then, according to the calculation, we divide by 12. So if you take 41.62, divide it by 12, we get $3.47, so almost $3.50. So what that's telling us is that I can divide these prices into 12 equal groups separated by $3.47. And I want to do that and calculate the volumes in each of those areas. So let's go back over here to the left. And what I'm going to do is I'm going to look at this first closing price, 172.23. And let's just put in a formula here. And we're going to say, let's take that number and add $3.47 to it. And that gives me 175.70. And what this means is I'm looking for all prices between 172.23 and 175.70. That's just $3.47 higher. So if you look, I can come down here. I can't include this one. That's 175.88. That's too big. So for this first zone, I'm only going to include these first two rows right here. And I'm going to find the total volume. So I'm just going to add those up, and that's what I've done over here, about almost 15.4 million. And then I'm going to do the same thing for my next zone. So let's mark this one off. I'm just going to put that in red. All right, so that's our first zone. I'm going to take this same formula right here, and I'm going to go to my second zone. I'm going to take 175.88, add $3.47, and I get 179.35. And that's telling me I can take all prices from the beginning of this second zone, 175.88, up to 179.35. So I can come up all the way up to there. I can't include this. That's 179.85. That's too big. So let's mark this one off. Let's see, we'll put it in green down here. This is our second zone. And what I would do is I would take all of the volumes and I would add those up. And that would be the total volume for zone number 2. And then I would do the same thing. I would take the same formula right here, and I would come down to this third zone, start at 179.85, and include all prices up to 183.32. So I could include all of those. Now, as I mentioned, you can also get fancy and separate these into increasing and decreasing volumes. And this is definitely a little more tedious, so it's really nice when the computers do this for you. But for example, let's come back here to this first zone where we just had 2 data points. We had a total volume of 15.4 million. That's that number right there. But let's come up and see if we can separate this. How much of this was due to increasing volume and how much was due to decreasing? And what we have to do is to go and look at the dates. But remember, my dates are out of order because I separated this according to the closing prices. So this first one right here on 10/26, the previous trading day was 10/25. So if I come down here to 10/25, and I had a closing price of 179.07. The closing price on 10/26 was 172.23. That was lower. So this volume right here, this 9.5 million roughly, was due to falling prices. That's volume that was pushing prices lower. So I'm just going to record that over here under my decreasing. 9.47 million was due to decreasing. Now, because we've only got 2 data points, obviously the balance was increasing. But just to show you how it's calculated, the next point was 10/29. That's my next row. And the previous trading day was either 10/28, or if that was a Monday, it would be 10/26. Now, I've gone through the data. I happen to know it was 10/26 was the previous trading day. So let's take a look at 10/26. We went from 172.23 to 173.20. That's an increase. So the volume on 10/29 right there, this 5.9 million figure, was due to increasing prices. So I'm going to record that over here under increasing. And then obviously the increasing plus the decreasing must add up to the total volume. So on the platforms that show the separation of increasing and decreasing volumes, it's kind of nice because you can see we got about 6 million here, but about 9.5. So we got another, 50-60% due to pushing prices down. So that might give us an indication that that's more of a resistance level. So it's kind of nice when you can separate these into increasing and decreasing volumes. But that's how it's done. But at a minimum, you're going to at least get this total volume. So now let's go over to the E-Trade platform and take a look at volume by price. All right, so now here we are in the E-Trade platform, and I've got Home Depot, and I'm going to select a 1-year chart. So we come up here to Studies, down here to All Studies. Now in this program, they actually call it Volume Profile. They don't call it Volume by Price. Most platforms are going to call it Volume by Price, but you might see it termed something different. But for here, we're going to select Volume Profile, and we only get one parameter that we can change, and that is the color of the bars. Now again, some platforms are going to say, do you want to separate into negative and positive volumes? But we don't get that choice here, so let's just stick with the defaults. And there are the bars. So one of the first things you'll want to check is the longest bar, and that's right here. So I'm going to line up my crosshairs right there. I'm sitting right about 177, 178. And what that tells you is we got a lot of volume at this price. Whether this was due to buying or selling, we don't really know in this platform because it doesn't allow us to separate it into whether it was due to rising or falling prices. But we can at least see that we got a lot of volume in here. However, we could also look back and say that it was probably due to buying because we got bounces down here. Stock prices didn't really fall too far below this. So one thing I would look at if you're in a period like when we went through this recent downturn here, you have to see this is an area where we're probably going to see large volumes picking up. And within reason, we did. Started to get a lot of buying pressure down here. Now on the flip side, we can also say these two bars are about the same. Let's go to the next longest, this one right here, somewhere around 186 maybe. And it's a little hard to tell in this instance whether it was due to buying or selling, because if we look at these prices, we could say could have been due to people buying, got this nice little rally here. But if we're looking over here, also saw selling at these prices. So this is kind of in the middle of our histogram. So that might be a little uncertainty right there. Again, unless we could divide it into positive and negative prices. So this one's a little tough to tell, and our histogram sits right in the middle, unless again we could divide it into whether these volumes were due to rising or falling prices. But another interesting area is this one, this kind of this next longest bar up here, and doesn't sit too far off of some of these resistance points. So this might be an area on the way back up where we're going to start hedging, maybe start doing our rolls, try to get some of that money off the table, but still keep those deltas in there. Very likely that we're going to see a lot of volume coming in at these prices. Let's go over and take a look at Amazon. Amazon has a very similar picture. And you can see that when we came off this steep decline down here through the end of October, longest bar right there at about 1440. And yet we got our bounce starting at around maybe 1480. But by Amazon standards, 40 points is really nothing. This would be an area that would give you some indication that we're probably going to see some heavy buying coming in here. Because over the past year, this is where we got the most volume, was at these prices. It's a very small range of prices. And started a nice big rally up here. So again, the idea is that we can use these histograms here, these bars, to give us areas of support and resistance levels that you might not find by using your flat lines or using your moving averages. Let's try one more. Here's Chipotle Mexican Grill. Now this one's interesting because you see this big blank area in here. That can happen, and that's because you got a gap. In this case, a gap up, and there just simply were no prices to record. But if you look up here, our longest bar occurred at about stock price of, let's say, 431, 432. Second longest one was down here at about 420 maybe. And look at that, right where that bounce came in. Also where we got good support here, good support here, and good support here. All happened off of this very long bar. Now, you're going to get the same thing in reverse if you happen to see large bars across the tops. And so, again, it's a little bit of a hidden way to look for these support and resistance levels because you're not going to see them unless you go through and resort the data according to the closing prices and then look at smaller ranges and find out how much volume occurred in those ranges. And that's exactly what volume by price will do for you. So if you're looking for a technical indicator to maybe give you a little bit more backup on your assessment as to whether you're heading into support or resistance, use your moving averages, use your flat lines, but also take a look at volume by price. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsaToZ.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.